Hey guys, so kind of replying to a comment from Cool Beans on my Cleanspark video, suggesting that I maybe do a bit of an update. It's been 5 months nearly since the sort of valuation model that I did before, and yeah, the sort of increased price since then, increased a lot of shares, so the market cap's gone up an awful lot more than the share price, but yeah, we're at sort of 700 million market cap now. If we believe sort of Bitcoin is going to sort of 100k plus, then in theory 700 million is still pretty low. But I wanted to sort of continue, put the updated numbers to it. So yeah, this was my sort of previous video and the sort of model that I came up with. It was at 190 million market cap back then. And I sort of estimated the amount of Bitcoin that I thought they would be mining from the halving, basically. So a year from the halving, and I got to 5,908. And I sort of modelled the figures basically under different Bitcoin prices, sort of averaging out after the halving. So sort of 30k on a very bearish scenario, 60k, 80 and 100k in the sort of the bullish scenario, to sort of see what I thought they were worth, or they would be worth at the time of the halving. And used this was the Q4 2022 as far as calendar year goes, and then sort of annualized that and sort of adjusted up for the future, what I thought was going to be sort of future costs for depreciation and that sort of thing, with the increase in facilities and costs for sort of buying additional miners and that sort of thing. And yeah, come to sort of my figures down the bottom here, adjusting for cash on the balance sheet, debt, and Bitcoin on the balance sheet as well. And then sort of putting price to earnings multiples, depending on, where the price will be, how sort of bullish people are on crypto miners, and sort of obviously how much profit they're making and profit margin they're making. So sort of reasonably conservative, I think. If we're getting to sort of 100k, there's potential to be making, 20-30% net profit. So yeah, maybe that'll be higher than 25, but you got to put some figures on these, and I always like to be conservative. And I got to sort of $7 turning profitable at the halving on 60k Bitcoin. Sort of any lower than that, or at certainly 40k and sort of the 30k number, I sort of get basically a worthless company. And 80k goes up to $21, and 100k I went up to $40, based on a sort of 25 times earnings. So I've updated it since then with the Q1 2022 and Q2, or basically just the Q2 2023 numbers, since that's the most up to date, and it's not looking particularly good compared to last time. So revenue, or taking revenue, is sort of kind of irrelevant really if we're sort of modeling the future revenue based on the Bitcoin price. So I put revenue in, but it doesn't really come into it. These are the depreciation and direct costs. I've actually pasted over the Q4 numbers, so they're not right anymore, but yeah, that sort of gives you not a great deal of gross profit, and then sort of general admin and stock-based compensation just wipes that out and puts them fairly negative. But they obviously use adjusted figures wherever possible, and they'll sort of knock out this depreciation because they say it's not a cash cost and that sort of thing. But obviously the cards they're using, they're sort of pretty well hammering them, and they'll probably need to be replaced in sort of 2 or 3 years, maybe 4 years if you can eke it out and the hash rate doesn't go up all that much. Obviously if it carries on going up, then they're going to be almost redundant sort of in a couple of years. So I think you do have to keep that depreciation certainly in there. And then, yeah, interest expense, I've updated to the most recent quarter and sort of adjusted this up. So yeah, I've left that at 1x. All the rest of these costs I've adjusted. Direct costs and depreciation I've upped by 50% from Q2 and then times by 4, sort of assuming obviously with the increase from they're at 9 exahash at the end of this isn't actually at the end of Q2, this is up to the end of July. So yeah, there's a little bit of discrepancy here, but you got to put something in the model and then adjusted. So times that by 50% extra to get the sort of new cards that have been bought and new facilities that they'll be running, and then sort of increased depreciation as well. So this has come up quite a lot from the previous model. I had this at 60 million. And yeah, maybe I was quite undershooting just how much depreciation would come from all the new cards and building the new facilities. Maybe the depreciation from the facilities isn't quite so important, so I can see why they might adjust some of that out, because the facility, once it's paid for, will be there, whereas the cards do depreciate and have to be replaced. But yeah, leaving all of this in, you sort of get 131 million, so doesn't look great. Gross profit sort of goes profitable at $60,000 Bitcoin. And then general admin and stock-based compensation, this has gone up quite a bit as well. Guessing this is staff costs, and then with staff costs comes more stock-based compensation as well. So I did split this out before. I've sort of combined these into one figure, and yeah, combined they're sort of a fair bit higher than what I had previously. So that and the depreciation are the sort of main contributors to the bottom line not looking quite so rosy. And then tax I've sort of kept at 30%. It's not going to be exactly what they're paying, of course. While they're losing money, they might be getting an income tax refund. And yeah, once they go to 80k, obviously they go operating profitable on my model, so they're paying tax. And then net profit is similar, net profitable at 80k Bitcoin. And then adjusting for cash and debt and Bitcoin on the balance sheet, this is looking slightly more favourable than it was before. They've sort of got a little bit of cash now and sort of reduced debt ever so slightly, and sort of started hodling a little on the balance sheet, not a huge amount. Again, this is from the July report, not the Q2 report, because it's the most recent thing we've got. All the rest I only have from the Q2 report. And so then I've applied the same sort of fairly, I think, conservative PE multiples. Obviously, Bitcoin mining isn't a super sort of favourable industry, so I've left these somewhat low. But I do think if we get into a sort of bit of a bull market and sort of regulation, certainly in the US, gets a little bit more favourable, and you could certainly sort of ramp these up. If we go to sort of 80k, 30 times, 35 times earnings, I think is sort of fairly doable. And 100k with a sort of favourable regulation, I would think, it puts you, even with the increased figures up here, sort of putting you at over 20% net profit. So yeah, you could be getting 50% if people start getting bullish, thinking it's going way above 100k, and sort of, yeah, they might be seeing that growth sort of continue into the future. So yeah, that 50 times earnings, you're sort of back to the $40 that I had before, basically. And then some people get really excited and sort of delete out the depreciation as well, and yeah, then you get to even $60,000 Bitcoin being profitable again, and the sort of $71 in share price for 100k Bitcoin. So that would be back to 15x even from today's price. But I think you need to still sort of stick a little bit conservative. So I'm sticking with 20 and 25. And I've left shares outstanding the same. They're at 133 million, I believe, now. And they do say the expansion to 16 exahash is fully funded now. So you do have maybe a little bit more share issuance for that if they're sort of just being bullish and saying that. And then, of course, you have stock-based compensation still coming into this as well. So all of this has contributed to quite a rough bottom line here compared to last time. Another thing that has sort of not helped is dropping the Bitcoin mined amount. This sort of has got a little bit worse than I thought before. The sort of 12-month figures now are starting at 504 Bitcoin. This is sort of taking the most recent month of 575. They're saying that they had an average of 7.6 exahash in July, and they ended at 9 exahash. So maybe a little bit bullish doing this, but divided by 7.6 and times by 9, should have the August numbers potentially tomorrow actually. So this may be sort of wrong already as of tomorrow, and I'll have to adjust, but I got to 680, and then I've taken 2% off per month, so 9 months for increased difficulty until the halving. So 2, 3, 4, 5, 6, 7, 8, 9, and then I've divided by 9 exahash and times by 16, which is where they're projecting to be, I believe, at the end of the year, but we'll say at the halving. It could be a little bit higher than that, but we'll go with that. And then divided by 2 for the halving. So brings you to 504 Bitcoin. And then, so I've put that in for April 2024. And then continue to drop this by 2% a month, as I say, because other countries are getting on mining now. You've got sort of Oman and Russia, I believe, sort of quietly getting into mining, and you still have energy companies potentially getting in, sort of using flared gas and sort of all sorts, potentially renewable energy if they're sort of oversupplied and sort of can't make use of all that energy in the grid, then they could potentially mine Bitcoin while nobody can use it if they can't store it. So there's lots of reasons the hash rate could continue to go up. So I am sort of keen to be still dropping this down going forward, and sort of totaling that up for a year from the halving gets you to 5,425. So it could be being sort of bearish on the depreciation and the general admin and stock-based compensation figures, but I think you have to sort of take a little bit of caution with something like this. So yeah, looking at the bottom line, it doesn't look all that pretty. It's sort of basically a worthless company at certainly 30k Bitcoin, 40k, and even 60k. At sort of 80k, which is quite a way from where we are now, I get to $6.29, which we're already at $4.70, and then at $100,000 Bitcoin, which is sort of everyone's target, I'm now at $20, which I was at $40. So it has come down quite a bit, to be fair, and that is sort of four and a half times the current share price, where 100k would be sort of 4 and a bit times the Bitcoin price, or sort of 4 times. So I think for something as risky as a miner, you would be hoping for a lot more than 4 times. But as I say, you know, PE ratios could be a lot. People may be willing to pay a much higher PE ratio, and they'll be sort of deleting depreciation, and maybe they're at more than 16 exahash by the halving without increasing shares outstanding too much. But yeah, we'll have to see where we go. So yeah, it's sort of got to be realistic, but that's my sort of updated model for where we're in theory going to be looking forward from the halving. Not looking all that good. But maybe the institutions, of course, you know, could be looking at, if they expect 100,000 Bitcoin, say by the end of 2024, maybe 2025, then they may sort of use a much more complicated model, I'm sure, but sort of come to similar figure, say maybe $20, and they'll think, well, 4.5 times my money. They're not going to buy Bitcoin directly, but they can buy a stock. So something like Cleanspark, you know, 4.5 times your money in 2 years, say, is probably going to be far, far more than the S&P or even the Nasdaq or even some risky stocks. So they might accept 4.5 times, where maybe before I had sort of more like 10 times. So yeah, that's I guess where a lot of people are seeing it. I did actually do a similar exercise with Bitfarms. It's not actually a stock that I own. I did own some options on it, but I sold these in favour of sort of gold and silver and Cleanspark options. But yeah, it's maybe I didn't put quite as much focus on this as I did with Cleanspark, but I think the figures are sort of roughly there, and yeah, this looks worse than Cleanspark, to be honest. It doesn't go sort of profitable on my model until $100,000 Bitcoin, due to what looks like a worse depreciation figure than before, and sort of general admin figures, and of course a much lower Bitcoin mined figure. This really doesn't look good at all, because they're only sort of projecting to be at 6.3 exahash, which is less than half of what Cleanspark are thinking to be. And Cleanspark are sort of nearly $700 million, where Bitfarms are, I think, 450 million. So well over half, and less than half the Bitcoin mined. So they don't look quite as good, really. And this is sort of my reasoning for holding Cleanspark over them, and I think Bitfarms even look a lot better than some of the others. So yeah, it's not looking too rosy unless you do sort of pump these numbers up to sort of bullish mode, basically, like I say, deleting depreciation if you really want to do that, and sort of bumping up to 35 and 50 PE. You know, then you can get back to 10x, you know, more than 10x the share price. But yeah, sticking to conservative mode, that's basically where I am. So yeah, leave your thoughts in comments below, and like and subscribe. See you soon.